Hello and welcome to Teens and Money, talking about some financial basics. Appreciate everybody being here on a day before Wednesday afternoon here in the midday. So hopefully you're having a great day, and we've got a great hour planned here for some of the financial basics and things that you're going to be using here the rest of your life. So we really appreciate you being here today. We are recording this, so if you ever have to step out or anything like that, we will have it available after this is going on. But also want to let you know you should stick around here the entire time, because we are giving away a $50 Amazon gift card here as well. So again, talking about some financial basics and skills you'll be using the rest of your life. If you have questions as we are going through this, feel free to leave those in the chat. We will also take a look at the Q&A portion as well. We have Holly Salibas also helping us out here. She is our youth marketing specialist here. I should probably introduce myself. That's just polite to do. Tony Byer, and I am Altra's financial wellness coordinator here. That's going to be leading you here through this afternoon. So again, appreciate each and every one of you being here. So what we're going to talk about in our brief time, I want to talk about some different accounts that you're going to find at a financial institution. So talk about what is the difference between, let's say, a checking or a transaction account, and then also savings accounts, how we can use those, how they are effective, and how to get the most out of them as well. We also want to talk about managing those accounts effectively, when we should use them, what is more appropriate for what's going on. We also want to talk about spending plans. So again, life skills, things you're going to be using the rest of your life. So the more that we utilize a spending plan, have that plan for our money, the better off that we are going to be. We'll talk about the steps in building a spending plan, something that's going to work for you, something that you'll actually stick with. There's a few different ways to do that, and find the system that works best for you. And then here at the end, we'll talk about some tools and resources available for each and every one of you. But before we get started, I actually just want to get a little information from you here. So when we talk about money, so when I say the word money, let's say, what comes to mind? So for those of you here on Teams through the app, you'll be able to submit your response. If you like, you can put this in the chat as well. But what comes to mind when we talk about money? So take a moment. So when we hear the word money, what comes to mind? All right, see, saving, very good. I love it. Earning, spending, so all of those things. Excellent, Ella. Our time, absolutely. Time is money. We got to earn that money. So jobs, very good. Shopping, we got dollars. We've got plans when it comes to our money. Spending money. We like spending money. Nothing wrong with that. Currency. All right. Very good, Jeremy. Yeah. Good. I love that we're thinking not only about the spending, which is important, but also saving. Yeah, currency. You bet. Alicia's a necessity. Sure. For a lot of things that we're doing. Yeah. Meant to be spent? Absolutely. And I will say that when it comes to money, what I have learned from others, everyone's attitudes are just a little bit different. For some, money is, it's meant to be spent. I can't take it with me. For others, I have to save every penny, every cent. Having a plan for it, all of those things are really, really important. So excellent. We appreciate everybody doing that here right now. So talking about we'll close the poll. We got dollars and plans right there as far as what we're thinking about when it comes to Our money, very good. But a lot of different things in the chat. Love seeing that here as well. So excellent, excellent. Um, so when it comes to having an account at a financial institution, whether that be a bank or whether that be a credit union like Altra, some reasons that's good to have an account. Number one, your money, it's safe, it's protected. Your money is guaranteed to be there up to $250,000. And we are insured by NCUA, the National Credit Union Administration, the Share Liability Fund, up to $250,000. Other financial institutions like a bank, they're going to be insured by FDIC, the Federal Deposit Insurance Corporation. But your money, it's safe, it's protected, guaranteed to be there. Also, a good idea to have an account. You have access to other products, other services, possibly other payment tools as well. So having that relationship with a financial institution is really going to help you out in the future, whether that be maybe we're thinking about a loan for a vehicle or a credit card or something of that nature. We're better able to do that if we already have that relationship and it's in good standing with that financial institution. Like I said, it builds that relationship for those future needs, other payment methods or things like that, or other technology that we may have access to, which is excellent. Another good idea, it's fraud protection. So if you ever, your card is ever lost or stolen, or maybe account information gets compromised, something of that nature, you've got that fraud protection. Whereas if you lose that money, if you got cash and you lose it, that's gone. But with credit card, debit card, something of that nature, we want to call, we want to cancel right away and close that off. So we are protected as well, which is really nice. It can make things really simple when it comes to paying for different things. We may be able to pay others, through peer-to-peer lending, Ultra Pay, things like that. Make payments online, and also deposit money when we already have those accounts. So something like direct deposit, we'll talk more about in just a little bit. But automation can be a wonderful, beautiful thing to make things just easier. You pay less fees for your money when you have an account at a financial institution. So you're not having to take, let's say, a paycheck and you're having to take it, to a financial or to a business, and they may take a portion of that money, a certain percentage of those fees. Or if we're loading money, let's say on a prepaid gift card or, debit card or something, that's our money that we're spending money on to spend our money. Yeah, so we don't want to do that. We certainly don't. Faster refunds as well. So we're not having to wait for a check or anything like that. Money can just be put directly on our card. And then you have a record of your transaction, something you don't have with cash as well. So all reasons to have an account with a financial institution, really important. So I want to talk about, two main accounts that we'll typically consider, especially while we're young. And the first one I want to talk about, really important, and that is a savings account. Let it go so it can grow. So this is going to be an account that we are putting money in quite often, or maybe even automatically, which is great. And we're just letting it sit there, letting it grow. And it's going to grow because it's earning interest, or as we like to call it at the credit union, dividends, because you are an owner. If you have an account at the credit union, you're an owner. So if you have an account at Altra, you're my boss. But I also have an account at Altra. So it's interesting. I have more than 150,000 bosses. But so your money, it grows through a savings account because, well, let's say that you get money from your grandmother because you are her favorite grandchild. Why wouldn't you be? So you take that grandma money and let's say you put it in your savings account. So you earn interest, you earn dividends, that extra money on your money, because actually that financial institution may use a portion of your grandma money, and that may go into an auto loan for someone else, that may go into a mortgage, that may go into a business loan, whatever. So for you letting that financial institution use a portion of your money, they give you money. And all you have to do with that money is just let it sit there, let it grow. You said let it go so it can grow. There are three factors that grow your money in a savings account. So the first one, it's how much money you have. So the more money you have in it, the more and the faster that's going to grow. Makes sense. Second one's going to be the interest rate. So that is that extra money that we are getting. With that, the higher that interest rate, the more we're going to have. And the third, probably most important thing, especially for each and every one of you here on this webinar, being young, time. Time is on your side. The longer that money sits in an account, the longer we don't touch it, the more we're going to have in the future. So again, I'm so glad that we're learning about this now. So again, it's going to be for future use. So we're letting it go so it can grow to something bigger, better in the future. Like I said, it's going to earn interest, or like I said, dividends as well. That extra money, it earns money on top of that extra money. The longer it sits there, compound interest is a wonderful, beautiful thing. Take advantage of it. So take advantage of some big goals that we may have in the future, or if an emergency happens. I can virtually guarantee each and every one of you in the future will probably have at least one instance, if not multiple instances, probably multiple, where you're going to have to fork over a bunch of money and you never saw it coming. You never know what's going to happen with your health, your career, your living situation, those that you depend on, those that depend on you, transportation needs, appliances. You just never know. So having that money in savings really, really going to help. Experts say we should have at least 3 months of living expenses saved up in an emergency fund. But it's also, nice to just think about these big things that we may have in the future. So I was curious, and you can put this in the chat or interact with the word cloud the poll that we'll have here in just a moment. But is there anything that you're saving for, or is there anything that you would like to have in the future? So feel free to put that in the chat if you like. But what is something that you would like to save for in the future? Something big, cool, awesome, perhaps. All right, we're talking graduation. Good. College. I love that we're thinking about our future education. I love it. Personal computer. Awesome. Very cool, Sam. An apartment. Absolutely. Absolutely. Oh, dog. And with a lot of things that we think about, especially an animal, but a lot of these things, we have to think about the total cost of this. So not only, some of these, a car, video game, maybe a dog, cat, something of that nature. You got to think about all those costs that go along with it. Because if you buy the car, are you done spending money on it? No, not at all. So we have to think about everything that goes along with it and really have that plan in place. That's really, really important. In the word cloud, we got truck and college. Of course, college, a house. Wow. Anything you do to reduce your student loan burden, certainly do that. We've done webinars in the past about paying less for school here, but anything you can do. So, those grants, look for scholarships. I can't stress that enough. Taking some of those post-secondary options or honors classes, AP classes while you're in high school, those college level classes, that's going to lighten your load for the future. And those are going to be classes we don't have to pay for in the future as well. So in the word cloud, we got a house, college, seeing that quite a bit. So we'll close that poll, but we'll take a look at the chat. But a lot of things that we're thinking about, and I love that we are thinking about the future. Never too early to start thinking about what we'd like to accomplish or things in the future, and never too late to make changes to your plan as well. I love it. Asri talking about starting his own business, traveling. Awesome. Yeah, when we have that money in savings, it gives us options. We're able to take advantage of opportunities. I love it. We're just fun. There you go. Fast food. Yeah, that's getting more expensive as well. So a lot of things that we are saving for, and I love that we're thinking about it, because goal setting and having that plan for our money, they really go hand in hand. So I'm glad that we are thinking about all of this now. Really quickly, want to introduce you to a couple of friends of mine, Brad and Jenny. They're not real like most of my friends. Brad, he gets started saving at age 18. saves $2,000 a year. It does earn interest, but after a certain period of time, he stops saving. He just stops putting money in there. He doesn't touch it any longer. That's important. And then Jenny, she gets started saving later, but she saves twice as much over twice as long of a period. So we'll see who has more at retirement, Brad or Jenny. And hopefully the video and sound comes through okay on this platform.
What is compound interest? Compound interest means earning interest on your interest. It's essentially free money. Let's take a look at the power of compound interest. Meet Brad. Brad started saving money when he was 18 years old. He saved two.
Okay, not sure what happened there. I was going to turn my video off because I didn't think anybody wanted to see me drink water.
$2,000 a year for 16 years, and then stopped. This means Brad put a total of $32,000 of his own money into his investment account. From there, he decided to let the money sit and not add any more to it. Now let's meet Jenny. Jenny didn't start saving money until age 34. She also saved $2,000 a year. However, unlike Brad, she continued to save every year through age 65, for a total contribution of $64,000 of her own money into her investment account. During this time, both Brad and Jenny earned a 5% annual return. Now let's fast forward to age 65. Whose investment do you think is worth more? Brad, with his total of $32,000 invested over 16 years, or Jenny, who invested $64,000 over 32 years?
So I will say both Brad and Jenny look great for 65. I hope I look half as good as Jenny when I'm her age. So Brad gets started at age 18, $2,000 a year, does that for 16 years. He stops, but he doesn't touch that money. Continues to grow. Jenny, she gets off to a later start, but she saves twice as much over twice as long of a period. Who do you think is going to have more in retirement? Feel free to put that in the chat. Brad or Jenny, or is this a trick question? Both are going to have exactly the same. You can say, hey, Tony's trying to pull a fast one here. So they're at that 5% interest. So think about that. So what do you think? What do you think? All right, see some Jennies, a few Brads. Some are saying the same. Both, okay. Yeah, both are going to be earning money, that's for sure. Yep, they're earning 5% each year. All right, so seeing. Okay, well let's see how they did.
Over time, compound interest accelerates your savings. Believe it or not, Brad came out ahead, over $78,000 ahead. Starting early is key. Brad put less money in, but started 16 years earlier. Since he invested earlier, the interest kicked in sooner. It turned his $32,000 into over $236,000, and he didn't have to do a thing.
So Brad comes out ahead. He made more than $200,000 of free money. Didn't have to do anything for that. Let it sit, let it grow. Jenny did pretty well for herself. She made more than $94,000 in free money. If she keeps putting in $2,000 a year well into her 200s, she'll start to approach where Brad is at. I don't know if she's going to make it past 200. She looks great for 65. And again, I know these are cartoon characters, but the big takeaway from this is getting started saving early and often. That's why time is so important. And just think about, many of you who more than likely are less than the age of 18. Just think, if you start saving money now, putting money now, because that interest, it keeps building on that previous interest as well. So I wish I could tell you that I was just like Brad and I was responsible and I put all this money into savings right when I was 18, and I'd be lying to you. I am much more like Jenny, to be honest with you. really, I didn't get serious about saving till my later 20s, early 30s. And by that time, I had missed out on years that my money could have grown via compound interest. So even just a little bit of money in savings, a little bit, really, really helps. So again, I'm so glad that we're hearing about this with that. And I see in the chat, as we're talking about with certificates, so that's going to be similar. And we'll talk about that here. A great segue, because a certificate, you have the opportunity to earn more money, more interest, more dividends, like I mentioned, because that financial institution knows that money's not going anywhere for a while. So it could be a great idea if you've got money that you won't need for a while. So teaching how to get rich. Slowly, but get rich. This is over the course of just shy of 50 years. So taking a look at that. But again, save early, save often.
Saving a little now means earning a lot more interest later. Start saving today.
You can start saving yesterday, even better, but today is a great day. So Asri, thank you for the smooth transition into certificates. So that is another savings device. So not only savings accounts, but a certificate. Other financial institutions, it might be a CD, certificate of deposit. Credit unions, it's a certificate. And wanted to let you know that we have a lot of different certificates, but we have a couple of great options for youth here. So we have our Grow Up certificate, which can be started by those that are little babies, all the way up until it matures at 12 years old. So money put in there, it earns 4% annual percentage yield. So that's going to earn 4% every year with that. So get started with just $100 with that. It matures on the 13th birthday. So with a certificate, you're not able to take money out of it until it matures. If you do, any extra money that it earned, any dividends, you forfeit those. So you don't get any of the extra money, but you are able to get what you put back into it as well. So it's open in a child's name. So this is something that parents, grandparents, people can do for a child. They can only do one. And the limit is $10,000 over the course of that certificate to put in there. So after 12 years old, so it turns 13, they can actually roll that Grow Up certificate into a graduation certificate. And that matures on the certificate holder's 18th birthday. So again, just like the Grow Up, $100 to get started, and can add up to $15,000 in that one. So it's a great way to get started with savings. So if you have some money that you're not going to need for a while, a certificate can be a great option. And we do certificates for adults as well. Not quite as high a percentage, but pretty well. So things to think about when it comes to saving. But save. Can't stress that enough. Help your money grow. So those savings accounts, again, let it go so it can grow. Now I wanted to talk about checking accounts. So we can think about these as a transaction account. This is where a good chunk of your money, let's say from a paycheck or something like of that nature, is going to go into a checking account. And this is where our spending is going to happen from. Quite a bit in and out is what's going to happen with a checking account. With a checking account, you can have a debit card. So that is something that is linked directly with that account. It is accepted where credit cards are accepted. So wherever you see the Visa logo, you're able to use your debit card, and it's taking money out of that checking account that you have. We have a lot of different options when it comes to a debit card as well. In many of the areas that we're proud to serve, we have partnerships with some of the different schools. So, show your school spirit, show your pride there. And also for every debit card ordered for that school, we also give back to those schools as well. So know that you're helping schools. So a debit card that is, again, used wherever credit cards are accepted. With a checking account, you can also get checks as well. I will say for our youth accounts, our youth checking accounts, we don't do checks. And to be honest, I rarely write any checks any longer. I write maybe a couple a year. That's about it. But that's going to be, you're writing it out to a business, a person, and that is going to, again, take money out of your checking account with that. So it could be, great for record keeping or something of that nature. So if you're, let's say you're paying rent or something like that, having, that record, that proof is really helpful instead of just paying cash or something of that nature. I will say that, but when it comes to checks, I rarely write them. I typically use my debit card when it comes to spending money from my checking account, but it is an option. It is an option here. You may get rewards or cash back with a checking account. So that's going to be, any dividends or extra interest. We do have even a youth account. You see there at the bottom, Live Your Life, able to get cash back. So many transactions each month with this, or there may be other credit union rewards, things like that. Al asking how old do we have to be to access a debit card? So I believe off the top of my head, and we'll talk about our Live Your Life account. I know that we're able to open the account as young as 10 years old with an adult on there. I know that a lot of the restrictions free up at 16. I believe as young as 13, we may be able to do a debit card, and that's going to have an adult, a parent, guardian, someone on the account with you. But we could do a checking account as young as 10 years old with, again, an adult, parent, guardian, some of that nature, someone like that. Debit card, that's going to be, or excuse me, credit card, that's going to be later. So, that could be really as early possibly as 18 on your own, typically look a little bit older. So, that's something I would say minimum 18, but may be able to be on a parent's card, be an authorized user or something like that. But some different options with that. And then you're also able to withdraw cash out of your checking account. So you don't have to carry around a whole bunch of cash everywhere. So if you're using, an ATM, automated teller machine, or you're getting money, let's say from a business, point of sale, convenience store, you put in your PIN, $20 there. So some different options for you when it comes to your money, and it's safer than carrying around a whole bunch of cash. I did want to mention a spend account that we have. It's our Live Your Life account. Like I said, with this, we could do it as young as 10 years old with a parent, guardian, someone on there with it, all the way up to age 23 with this one. So some great perks with it. There's no monthly fees with it whatsoever. With that, you get 3 free ATM withdrawals from Altra or co-op network ATMs. After that, there is a $1.50 surcharge. That's that little asterisk right there. But for the most part, yeah, there's no fees whatsoever with that. Overdraft fees. So you're opted out of Regulation E. So if you're trying to spend $20 on your debit card and you only have $10 in your account, it's going to reject the transaction on there. There's no minimum balance. So you got to be above zero or above. I will say that, but there's no balance that you have to keep. And if you fall below that, you'll get dinged with fees. That is not a part of the account whatsoever. Like I mentioned, there are cash back rewards with it. So if you make 10 purchases using the debit card per month, each transaction after that, you earn 10 cents right there. So the more that you use it, the more that you get back as well. And like I said, it's safer than carrying around cash. If we've got a whole bunch of cash in our pocket's got a hole in it. Where'd that money go? It's probably gone. But if let's say we lose our debit card, lost, stolen, whatever, call, cancel right away. Can't stress that enough with it. But like I said, our debit cards, they're linked to your checking account. You could pay others, pay purchases, pay for stuff online, and withdraw cash from an automated teller machine.
Check it out.
We are checking it out. There we go. Again, wherever you see credit cards accepted, we can use our debit card. Now, a common question that I get with those with a debit card, and you might experience this at a business, at a point of sale, you've got your debit card linked to your checking account, and they ask, is this debit or credit? How are we running this? So really the difference is the processing network and who's paying the fees for this transaction. So if we choose debit, the funds are going to be taken from your account like almost instantly. It's actually going to be run through one of the networks that you'll find on the back of your debit card. So Plus, Pulse, Star are some of the big ones. With that, you will have to put in your 4-digit PIN number. And again, keep that private. That is your number. Don't give that to anybody. But like I said, that money's going to be taken from your account almost immediately, right there. And the financial institution, so the issuer on the front of the card, they're the ones that are paying for this transaction fee. If we choose credit, that is actually going to be run through ACH, the automated clearinghouse. That's going to go through the credit card networks. So there's going to be a series of verifications with this, depending on that business, depending on their processor. It could be pending for a day, 2 days, can't be any more than 3 by law. So that's why you might see some of these transactions as being pending on here. And with that, the business, the merchant, the business, they are the ones paying the transaction fee. So there may be some places that only do a debit card, can't do a credit card. I know we have a big grocery store here in Onalaska that for the most part does not take credit cards, takes only debit cards, and that's to try to keep fees low to do that. So, but both are taking money from your checking account. If it's run through credit, it's still going to come from your checking account. It is not credit. It's just the network and how that information is getting there for the most part. Talking about convenience, think about when it comes to your financial institution, what you're able to do online. What are you able to do on your phone? Can you open up, different accounts, apply for different loans, pay for bills as well. Bill pay, something we're able to do. Are we able to get your statements online? And for the most part, I know we do quite a bit of that, and I know other institutions do as well. So you're able to reconcile, so know what the records you have and your financial, making sure those are the same. Mobile banking, being able to take a picture of the front and the back of the check, and that's automatically in your account. Very convenient, very nice. Our mobile wallets as well. So, doing basically the tap to pay with your phone, with your, could be your tablets, watch, whatever, and boodoo, that is process there. Something that we have in our offices, biometric verification. We have palm vein verification. So once you get registered with that, they get a good scan of the veins in your palm, which is basically just like your fingerprint. It's very, very unique and able to just go up to, in our offices and just scan your palm, and all of your information comes up right there in front of our member service representative. And then also able to pay others. There's a lot of different services out there. Altra Pay is one of them that we have. So Ella asking about Apple Cash or PayPal. For the most part, that's going to be linked to an account that you have, more likely a debit card, perhaps, but could possibly be credit as well. Basically, that's just another way to be able to send money to a business, to a person as well with that. And they basically act, those services, like a wire. So that money, it is only going one way. You're not able to get that money back via that wire. So know that using, but those are some other services that could be used with a debit card, with a checking account, or possibly even a credit card as well. Great question, Ella. With all this, we want to avoid fees. When you pay fees, you have nothing to show for it. So overdraft fees. So know how much money you are able to spend. You can also, as an option, set up overdraft protection from savings. So if we do overdraw our checking account, we spend more than what's in there, it can take money from your savings account to cover the rest of that transaction. And the fee for that is a lot less than, let's say, a non-sufficient funds fee with that. So that could be another option. And then also getting money out of an ATM, out of an automated teller machine. You want to use ATMs that are from your financial institution, your network, and then also, taking a look too at what that machine charges as well. So you may get a fee from your financial institution, and also that ATM may charge a $2, $3, $350 fee as well. Now, with credit unions, there's a lot of cooperation, a lot of competition. I like to call it co-opetition. And one of the things that we have in place is the co-op shared branch network. So Altra is a part of that. So if there are ATMs that are a part of the co-op network, our members don't have to worry about paying an extra fee with that, which is really, really nice. It gives our members access to more than 30,000 ATMs across the country without any fees, and then also up to 5,000 branches are able to utilize as well. So the credit union may not say Altra on it, but our Altra members would be able to use it if it's a part of the co-op network, and vice versa. So a really nice thing to have, and a way, people helping people. That's what we do here at the credit union. And then also getting cash back from a branch or from the merchant. You're at the convenience store, you're at wherever we put in that we'd like cash back, we're going to put in our PIN number, and able to do that as well. And Alicia asking about the ATMs in the co-op network. They do have an app that can look at. You can also look at online as well, as far as the co-op network, and where you might be able to find ATMs and branches that work for you, that you're not going to have to pay a fee as well. So you can find that information just if you're able to search co-op network, co-op shared branch. They do have an app, I know, on Android, Apple Store. So another thing to consider as well. So excellent question, Alicia. But the most important thing with all of this, don't spend money you don't have. So know your balance, really, really important. Do mistakes happen? Do we forget about? Absolutely. We're human. It's definitely happened to me in the past as well. But we want to make sure that we're checking our balances. We know how much we have available to us within your account. Like I said, you might have some of those pending transactions. Looking at your it's going to be your account balance, not the available balance. So look at the lower number, basically. That's going to have more of what you're going to be able to spend with that. But again, know how much money you have, and don't spend money you don't have with this. And again, you want to avoid those non-sufficient funds fees. We're trying to spend money that's not in our account. The transaction, like I said, with our youth accounts, that is going to be canceled. But so if we're trying, that's why we don't have checks on there, so that we're trying to, and the check bounces, we've got a non-sufficient funds fee. The business may charge a fee, so it could be really expensive to spend money that we don't have. So Antonio asking, what happens if you spend when you don't have enough? So I will say, with our debit cards, especially our youth cards, and by default, we are opted out of Regulation E. I'm kind of getting into the weeds here a little bit, but like I said before, if you're trying to use your debit card, you've only got $10 in the account, you're trying to spend 20, the transaction is going to be denied. It's not going to let you pay with that card. Now, if we were let's say we're over, we're over 18. We don't have a youth account. We don't have that Live Your Life. We have something else, and we say, you know what? I want to avoid that embarrassment. I still want the transaction to go through. I want to opt in to Regulation E. I don't recommend it if you don't have to do it. But the transaction will go through. There's going to be fees that you're going to pay with. You have to pay back, what you owe. So again, as we're saying, you're in debt, yeah. And then there's going to be additional fees with that. So it can be pretty expensive to spend money we don't have. So always know how much money we have. And if we're doing that a lot, we're a lot of non-sufficient funds fees, that can put our account in jeopardy as well. So we really want to avoid doing that. So don't spend money we don't have. So great question. Again, I've mentioned this a couple times. If you lose or your card is stolen, make sure we call, cancel, report it right away. The sooner we do that, the better it's going to be. Any fraudulent activity, anything weird, anything out of the ordinary, any purchases that we do not recognize right away, let your financial institution know. You want to memorize your PIN number. Don't write it on your card. Don't have it there in your wallet and try not to make it too obvious, but it's going to be a 4-digit number that's important to you. Make sure you keep that a secret. Don't give it to anybody because you are responsible for that. What would be the number to call if the card gets stolen? So number's going to be on the back of the card, which probably won't help you because the card would be stolen. Can easily look that information up online, or you're able to report it actually through our mobile app as well, and get that information right away. So excellent question, Antonio. So yeah, looking it up online, looking it up within the Altra app. So if we're talking about an Altra card that gets lost or stolen, but right away, call, cancel. Can't stress that enough. And also know too, when it comes to if you're getting calls, text messages, emails saying, this is your financial institution, or this is Altra, and we need your PIN number, we need your login information, we need your social security number, your account number. No. By law, we've got that stuff on lockdown. We never need it because we have it. And if you're getting a call and you think it might be legit, let your financial institution know. But more likely, they're going to say, nope, that is not us. But I know that financial institutions, we like knowing that information, and we can warn our members and say, hey, this is something that's happening. Just so you know, it's not us. Don't answer the phone. Don't click any links, text messages, anything like that. Your financial institution never needs that info. Also be careful when you're on public Wi-Fi, a guest network. Don't do anything financial over public Wi-Fi. You never know who could be intercepting that information. Some of the worst places are coffee shops, hotels, and airports are some of the worst places for public Wi-Fi. Those that know a little bit about what they're doing, they can set up another device. You can connect to it. Sure, you'll connect to the internet, but they're getting everything that's going through there. So you're better off turning off the Wi-Fi, going through your cellular network, your mobile network, or wait till you get to a trusted internet source as well. But don't do anything, log into online banking, anything peer-to-peer lending, anything where you have to enter account or card information. Don't do that over public Wi-Fi guest network. Mix up your passwords. Don't have the same password for your financial stuff as you do for social media, email, things like that. A password manager could be helpful, perhaps, to mix that up. You want long, complex passwords or a passphrase, something you'll remember. And then, be careful what you don't know. Don't recognize any links, attachments, text messages, things like that. You certainly want to be careful. Just like I'm sure we all heard as children, stranger danger. It's still true as an adult here. So be very, very careful and wary about all of that. So we want to talk about what we can do for our own money and having a spending plan. This is, again, something you're going to be using the rest of your life. So the sooner that we get into this mindset, the better it's going to be for us, and the more natural all of this is going to be for us. So how it can help us is just knowing where and how we're spending our money. If we've never kept a spending journal, if we haven't looked at our statements all that closely, or our online banking, or things like that, it can be really eye-opening. To see some of those little costs and see how they add up as well. And if we know where we're spending our money, and how we're spending it, we can make little changes in order to make it work better for us. And also, it sets the stage for our next budget. Hopefully, each and every one of you don't have too many bills yet. The teens, sorry, adults, yeah, we got bills, and you're only going to have more in the future. So we want to make sure those are taken care of. Like I mentioned before, with that emergency fund, making sure that because you never know what's going to happen in the future, having that money in savings, something you can access very, very quickly, very easily, something we would call liquid. It's like a savings account. You're able to get cash easily. So yeah, the more liquid something is, the easier it is to turn that into cash. Investments, things like that, that can be more difficult. A savings account, that's going to be pretty easy as well. Makes it easier to save money when we have a plan for our money. Goal setting, we mentioned a little bit about that. Many of you have awesome goals. I love to see it, talking about college, a future apartment, home, car, trips, computers, video games, and just fun. So you've got options, which is really nice. And then peace of mind. Money troubles can affect all areas of a person's life. It can make it difficult to concentrate in school. It can make it difficult to work. It causes havoc and strain on friendships, relationships, family, even internal stress. So having that plan is really, really going to help. So quickly, some steps to put together our spending plan. Again, know where we're spending our money. If you could do every transaction, every penny, awesome. There's different software that can, link to accounts and kind of count some of that for us. I say have a really good idea of where you're spending and how you're spending your money as well. But, you can keep a spending journal, diary, but like I said, those little costs, they add up and add up quickly. But we got to know where we're starting from. So that's why we want to make sure we know what's in our accounts, what we're doing. Next, those priorities. What's important to you? That comes first. So those needs, things that have to be in our spending plan, we certainly want to do that and make sure that's in there. Our situations, our circumstances, all of those things have to be in there. So let's say we like looking good, we like dressing nicely. We've got the nice shoes, nice, all of that stuff. Have a plan for it. Really, really important. But know that if we're spending that money on our clothing, we don't have it to spend elsewhere as well. So something to keep in mind with that. If we like going to concerts where they're breathing fire on stage there in the middle, doesn't look safe. I don't know, but I don't judge. That's fine. Make sure it's part of your budget. If we're thinking about the vehicle, again, all those costs that go into it, make sure that's a part of your spending plan. And our spending plan is going to keep changing. It is very dynamic. I mean, it's always changing. It's not a set and forget it type thing whatsoever. Really recommend once we start having a regular income, we're working. If you're able to do direct deposit, that way your money goes directly into a checking account. You can have a portion of that go directly into savings. So you can do automatic transfers or payroll allocation or something of that nature. So that way, if you don't touch that money, you don't spend that money. And if you don't spend that money grows. So pay yourself first. Really, really, really important. Can't stress that enough. Just like any other bill, when we get money, put some of that into savings, because we wait around a while, do our thing. Not going to be much of any money to put into savings. At least 10%, at least a dime out of every dollar. If you can do more than that, especially while you're young, as we saw with Brad, especially, and Jenny as well. Save. Can't stress that enough, but pay yourself first. Quickly, I'm just looking back at the chat. Jared saying being an adult, use a lot of rewards apps. There you go. Yeah, being smart, with your money. If there are different stores or things that you're going to purchase, you're going to need, do your homework. If you're able to get some of that, money back or cash back or save on those, awesome. Absolutely. I am all about that. And then Elsie saying, first start saving money. Which account plan should I set up first? So, the savings, the nice thing about that, you can set up a savings account at any age, which is really, really nice. So, having that in place first, being able to put that in there. And then, we start feeling comfortable, being able to manage our money. then I start, thinking about the checking account. But yeah, so I mean, savings is really, really important with that. So don't know the whole situation, but things to think about as well. But a lot of this is the foundation, for good financial money management. When it comes to making a plan, use a system that works for you. There's a few different systems out there. So studies have shown that those who rely on cash typically spend less than those who rely on a credit card, especially even a debit card. You're parting with a physical item, you're watching your wallet, your billfold, your purse gets smaller with each transaction. And the nice thing about cash, you can't go negative with cash. We can go down to zero. We can't go below zero like we can with a credit card. And when we're in debt, we're not able to do what we want with our money. You got to pay back that debt and typically pay interest, that extra money, that cost of borrowing with that. But that could be an option, and a popular method with cash is the envelope method. So you've got a different envelope for each major category of spending. Get your paycheck, put in cash, and put it in and allocate it. Give it a job, physically assign it someplace. So it's shown to be a very effective system. I believe it's being called the cash stuffing method. Now on social media, it's having a moment. But a good friend of mine, he's done a system like this since he was in college. He's done it for quite a while. It works for him. I know it wouldn't work for me. For whatever reason, I get a little cash in my pocket gets warm, and I got to spend it. I'm a lot better with a debit card, with a credit card. That way I can look online, look on my phone. I can see my transactions. I know what's there, but I know that doesn't work for everyone as well. If you're a very visual person, and if you've got like a central calendar or something, you can put on there the calendar method. You've got your paychecks on these Fridays. You have these bills due these days. And that can help you, know your cash flow throughout the month, and you don't forget anything. And we'll talk about the payday debt cycle here in just a moment as well. But there are different spreadsheets there, the pivot tables, whatever, all of those things. But there's a lot of different systems out there. Use something that works for you. But I really recommend, if we're just getting started with this, or if it's been a while since we put together a spending plan, pen and paper works great. So again, we've got to know what we're working with. Our money coming in, so we got our paycheck. We've got birthday money from grandma because we are her favorite grandchild. Why wouldn't we be? So we add up all of our income, all those sources of income. And then next we have our expenses. So we want to put money into savings first, pay yourself first, food, clothing, gas, car insurance, music subscription. If you want to get gifts, we have to give gifts. So grandma's got everything coming up. We're going to the water park. Why not? And this budget has not aged very well. I still have a fidget spinner on here for $5.28. You guys remember those? I don't either. So the total expenses, add those up, subtract that from the income, and we got a little money left over to put into savings, or it gives us options, which is really nice. So the more basic your spending plan is, the more likely you are to stick to it as well with this. It's something super complicated, not in your nature. We're probably not going to stick with it. So again, find a system that works for you and do the best you can to stick with it. And if we get off track, that's okay. That's really to be expected. I don't know anyone that's just born with this, just natural ability to put together spending plans and stick to, right out of it takes a while. And you get off track, do the best you can to get back on track, give yourself some grace with this, but really, really important. So looking back at the chat. So as you're saying, money books, absolutely. A great way to categorize your different earnings. So I've seen them where you've got different, slots for the money, or different binders or things like that. So physically assigning it to, absolutely. So, something that's going to work for you. And Antonio asking, if you go to the bank to make a deposit, are there steps, or can you just deposit and leave? You can just deposit, leave, really. So, I mean, you probably want to get a receipt or something like that, and that can just be emailed to you, or you can get a physical receipt. But you want to make sure that it's going to your account. So take a moment to do that. If you are depositing, let's say after hours or something, there might be a night deposit box. So you're putting your account information on the envelope, let's say with that. Or if you're using one of our SAMEs, you're just able to put in your debit card, or like I said, the Palm Vein. You can deposit money, checks, things like that, and yeah, you can have it can print out a receipt for you right there, or email your receipt or something like that too. So it can be real simple, real easy. Like I said, you could do this all online as well. So great options to have. So like I mentioned, we want to avoid the payday debt cycle, and let's say we get paid today. Why not? It's payday. It's a great day.
Morning, cha-ching.
Hey. We're feeling pretty good. We are feeling so good, in fact, that we are digging up some 90s music. Why not? I'm showing how old I am here, but yeah, we're going out. We're jamming up. There we go. Feeling like a millionaire. Just got paid. Oh yeah. It gets cheesier. Just you wait. We're gonna treat ourselves. I'm going out to eat. I got money at home. We're gonna get rid of the '90s band. They might be litigious, and I don't know the rights to that song. But we're going out to eat. We got food at home. I'm going out to eat. And then after a few days, like, I got to be responsible. But then we see an awesome pair of shoes. Yeah, I'm getting those shoes. And then all of a sudden, we start looking at, when is our next payday? We spent this money. We're pulling out our pockets, and we are crawling. We are trying our best to get to our next paycheck. We are digging, money out of couch cushions and change jar or something like that in our car, and then we just limp to the next payday. But what if something happened unexpectedly with that? So that's why having that spending plan is so important. Knowing how much that we have, what we're spending it on, and doing our best to stick with it. Like I said, if there's a lot of different tools and resources out there. Pen and paper works great. We have financial coaches at our offices as well that there's no cost to meet with. They can look at a spending plan. They can look at debt and bills, and you have somebody in a friendly table to discuss and just to see, am I on the right track, or is there anything that we can do as well? So, I believe most of our offices, we have a certified financial counselor as well, our coaches. Nicole's saying the app and mobile deposit are very helpful. I absolutely agree. Mobile deposit, just being able to just take a picture of a check and having it, right there in your account, very convenient. And you always know how much money is in your account. So we have a lot of different tools and resources available. So if you go to our website, altra.org, and if you were to click financial wellness, and then for students, but we have different resources for families, for teachers, different calculators, all these different things. But that's going to take you to a page, if we're looking at for students, that's going to look. So what this looks like, we have different. They have videos. There are infographics here. Like I mentioned, bonsai, there are different levels of that. So for those that are real young, those that are middle school, high school, even adults, are coaches. And then Zogo is another thing to consider as well. It is a free app, and there are money lessons on it. Answer some questions about what you just learned, and you can actually earn gift cards. So you're earning while you're learning, but a lot of different tools, a lot of different resources, educational events, scholarships, and you can find all of that on our website at altra.org. We really appreciate everybody being here. We'll stick around a couple minutes if we have any other questions in the chat. More than happy to help here, but everybody have a great day, and thank you so much for joining us for Teens and Money.